Hey guys, welcome back to another Solana video. So where we left off yesterday, we were talking about the rejection off of the 89. We're talking about the swing short trading on Solana towards the 65.54, where it's our ultimate target, especially if Bitcoin is falling as well. And of course, if Bitcoin were to fall beneath 60K, then we'll have an even lower target. But as of right now, our swing trade is targeting from 89 to 64. And we said this because of the rejection of the 89 level. And then when we talked about it precisely yesterday, when we went into the hourly time frame, what we were talking about and why we were saying this was because of all the buyer rejection and the shorts piling in. Firstly, we talked about the buyer rejection here, where we saw buyers coming in to try and bring Solana above 89, which was then failed. And so we saw short sellers piling in, despite the fact that buyers were still trying to buy, but then the price went lower. And this was a lower low in comparison to the previous attempt to break out 89. And then when it attempted again, what we saw was a gradual decrease in price after we rejected the 89. And what this was the buyer exhaustion. They're waiting for a new opportunity. And you can see we were creating lows all the way here. But we knew that it was gonna, firstly, not only touch that previous low that was created, and of course, if we face rejection, it was gonna go even lower. And that's in fact what we saw. And if you take a look at, of course, you know, the resistance line that was here previously, you can see how price was rejecting against it over here. And then that's how when we fell, you can see again being brought back up to this line, and we were seeing the rejecting. And so this is something that we were talking about in our previous video. And I just wanted to show an example right off of pretty much the end of the video yesterday. I decided to take a trade just to show you guys how easy it is right now to understand the movement that's happening in Solana. And this is a very short trade. You can see the entry price coming in at 83, and then the average close price coming in at 81.4. And I'll break it down to you guys for why this was. Firstly, we were trading on the hourly because the swing trade was from the 89 all the way down to 65. So we're still in that long-term swing trade. But for those people who missed out or wasn't listening at 89, there were still opportunities, because what we was still seeing buy exhaustion. We were still seeing short selling momentum. And that has to be shown in the 15 minutes time frame. So essentially what happened was, and why I closed out on this position, was as we saw the price coming in, and once again you can see this was from 83.95. So this was around this area, 83.95. What we saw was the price rejecting, and we saw the price going back up firstly, and this was showing that there was previous resistance, as you guys can see from over here, and previous data as well. So we knew at this point, and this is going back to the 7th of February as well, we knew at this point there were sellers, and the sellers were going to be stronger because the buyer exhaustion was bigger this time. They are waiting for a more discounted price, and hence why we took this short at 83.95. And then as the price was going down, what you will see is that I closed around, going back to here, 81.40. So it's around over here. Now the reason why I did so was because the fact we were seeing buyers then coming in. Now you got to be wary, and again, of course, hindsight is that I could have left this trade in and got more profit. That's of course 100% true. But when you take a look at what was happening here, we were seeing a support being formed. We were seeing buyers that were coming in. And so this to me also was saying that perhaps now this is where buyers are thinking it's discounted, and they want to bring it up in another attempt to ultimately go up to that $89. And hence why I closed out the trade at 81.40. But you can see how this is pretty much textbook, and all the levels that was being used was mentioned before. Firstly, the hourly time frame was because of this previous low that we talked about, and this low as well. We mentioned both of these lows. And so as we saw the price go up, we knew, and this is where I took the trade, we knew that there was short sellers here, there were short sellers here. These were previous levels. And because the buy exhaustion was bigger here, it was very easy to take a trade. And then when we saw the buyers coming back in, which was around here, we then decided to take the trade out. And so that's why and how I took that trade. Now, bear in mind that this was literally based off of was from 1 hour time frame with the confirmation from 15 minutes. But the ultimate ones, the big ones that I'm talking about, has and of course always been this long swing trade coming in from 89 to 65. And the logic applies the same as well. We know the entry point is around $89. Where I'll decide to take profit if I'm letting it ride will be 64. But if we're seeing buyers coming in, if we're seeing in the hourly time frame, and so far we haven't, but if we in the hourly time frame see a very long consolidation of just price keep on going down, but it's being brought back up, keep on going down, but it's being brought back up, and we're seeing some higher heights being created, then ultimately it's showing that there are buyers at this level. That's when I'll decide to close out my long-term swing trade, because that's when it's showing that buyers are willing to accumulate at this level and then bring it to the high. So far, we have not yet seen that, which is why I'm still in that long-term trade. But for the short-term trade, I just wanted to show you guys the example of what you can ultimately do. Now, when we take a look at what's going on, firstly, you have to realize we are still right now seeing sellers. If we take a look at the daily time frame, we're still seeing sellers. And now, even in the daily time frame, you know, the same logic applies. If you want to take a look at that reverse trade, you can use the 4 hours or you can use the daily. I just talked about the 1 hour, I just talked about the 15-minute, but the same logic applies. If in a daily frame, we're seeing consolidation for multiple days of candles going down, being brought back up, going down, being brought back up, going down, being brought back up, and higher heights was being created, then you can see how that is showing bias accumulation. And then if you want to reverse out of your trade and actually in fact go long as well, that's of course completely fine. Personally, for me, when I get out of my short trades, I don't look into an instant reversal trade. I want to look for more levels, but it just showcases that it can obviously do it. But ultimately right now, nothing has changed. I based off my trade off of the daily time frame, off of the 89. I'm going to base it off of the daily time frame as well, looking at the 65.54. But again, if we're seeing buyers, I will of course exit out of the trade. That's it for the technical analysis. As always, none of this is ever financial advice, and I'll catch you guys next time.